British Prime Minister Liz Truss has defended her government's controversial mini-budget, which has triggered widespread economic turmoil, and called it decisive action, one that's needed for long-term growth. But what exactly is the plan that's seen the pound tumbling to record lows? Priyanshi Sharma breaks it down.
Well, Ankita, the United Kingdom is facing record inflation, rising interest rates, prolonged recession fears, a plunging currency like several other global economies. But what the UK is doing to fight these range of issues seems to be counterproductive. Number one, the Central Bank of the United Kingdom raised interest rates to a 14-year high. Interest rates are increased to bring down inflation in the economy. Why? Because they bring down the money supply in the economy by making borrowing more expensive. So on one side, the Bank of England is trying to bring down money supply in the economy. But on the other side, the bank is pumping in money by pledging to buy around $69 billion worth of government bonds to boost the stock market. But this more money in the economy means that people will have more purchasing power and they'll demand more. This increased demand can again increase inflation. So naturally, there are questions on how the bank plans to bring down demand while also increasing it on the other side with another move. So it's both expansionary and contractionary moves, both at the same time. So that's really questioning the decisions of the Bank of England. Amid all of this, the United Kingdom, which is of course a developed economy, is being seen as an emerging market. Why is that? Well, pound is at a record low while government bond yields are on the rise, which is a sign of an emerging market. The government, the Liz Truss government, plans to boost the economy with a $45 billion debt. This $45 billion debt that's funding tax cuts. But the IMF says that these quote-unquote untargeted tax cuts will increase inflation and inequality in the United Kingdom. The BOE chief, the Bank of England chief economist, also said that they will need rate hikes to counter the government's tax cuts, as tax cuts will also increase demand in the economy, which can of course raise inflation. The Institute for Fiscal Studies, a think tank in the United Kingdom, said that the public borrowing in the country will be the third highest since World War II, as the tax cuts are planned to be funded by debt. The Liz Truss government took over less than a month ago, and now there's serious criticism over her government's economic plan.
Right.
There are concerns over the new PM Truss after this economic plan came out.
All right, Priyanshi, thanks so much for joining us with that.